Hello traders, hello everyone, my name is Gregor and welcome to our new video update Surfing the Elliott Waves, where I will look at some of the most interesting developments for this week. This video has been brought to you by Orbex. So I will look at the dollar versus Chinese yuan, euro dollar, dollar yen, S&P 500, gold, silver, dollar NOK, and quick look at the euro pound. So as you know, we have a very important week. It's going to be a busy week. We have been waiting on this for a while because we will get some more clarity regarding central banks' decisions on interest rates. Today we have Fed, so this one will be probably the most important. What's really interesting is that there is inflation still ticking higher in some of the countries. Like for example, we have seen higher inflation in Australia, also slightly higher in New Zealand, also in Spain. So it looks like that this inflation is maybe not a done deal yet. Okay, and if that's going to be if that's really the case, and if maybe the Fed is watching the global data, then obviously they could have a different approach. Maybe they will try to stay hawkish and will not highlight the potential neutral rates going forward in upcoming meetings. So if that's going to be the case, and if really maybe Fed will come out and say that they will look for more hikes in the future, that they will do anything what's needed to bring inflation even lower, especially if maybe on the next data on the inflation from the US will tick higher, then this, in my opinion, would be very bullish for the US dollar. So in such case, we could see some recovery on the US dollar, but then on the other hand, you have the ECB tomorrow. Okay, so even if the Fed would be very hawkish today, we could see US dollar turning to the upside. But then you have the ECB for tomorrow, which also is expected to be hawkish. So that's when the euro bulls could come back in place. So we could see some very interesting back and forth moves in these very big ranges. Of course, there will be potential breakouts, but keep in mind that until all central banks are behind, some of the breakouts can really be failure ones. Okay, so keep in mind that. Also looking for the first market, it's going to be dollar versus Chinese yuan. As you know, this market is now somehow very slow because of the holidays from last week, but now when normal volatility returns and when we have the central banks, I think that we will get some interesting price action. This one, this dollar versus Chinese yuan is very important. It's like an indicator for risk on flows. Also, it has a very strong correlation with gold. So if you are going to see this market moving to the downside, means that Chinese yuan is doing better. So because of its very strong link to the global economy, of course, this has a positive impact on other assets as well. So if dollar Chinese yuan is going to see more weakness after this wave 4 rally into the wave 5 towards these head and shoulders targets around 6.65, then of course gold, silver, stocks could stay in uptrend. But what is important is that this wave 4, in my opinion, is still incomplete. So looking here at this 4-hour chart, notice that I'm still missing this wave C to the upside. So if we see our prices starting to shifting towards the upside for this wave C this week, then it means that Aussie Gold S&P 500 will have a strong resistance. So even these markets could then see some sell-off. Okay, so just be aware that if this, as long as this wave 4 is unfolding, we potentially could see the limited upside on those assets. Okay, the idea is that this market after wave 4 correction will complete, should continue to the downside. That's when Aussie Gold S&P 500 could really explode higher. Also, since I mentioned these sets, let's firstly take a look on gold. On gold, I adjusted the wave count a little bit because this latest drop from the wedge that we have been tracking last week unfolded very nicely, but with a limited weakness here at this trendline support. Also, that was a wave 4, former wave at 1895, from where we have seen a very nice reversal to the upside. So it looks like there can be more upside coming. If market will just stay choppy here, then maybe this wave 4 could be even more complex, but still it's going to be part of an uptrend. So I think that sooner or later gold will be headed higher, but just don't touch this market until we get some more clarity from the Fed, okay? Because obviously yields will impact the gold and dollar in general. Also looking at the silver here, I really like this one. It's interesting to see that silver is sideways despite very strong move to the downside here on dollar Chinese yuan. You can actually see this correlation here. So you can see that there was an ongoing sideways price move here on silver despite dollar Chinese yuan coming to the downside here, okay, from the start of the year. However, if this downtrend will resume after the corrective wave 4 is finished, then I think that sooner or later silver will also try to catch the upside here. Okay, so I'm watching this one very closely, but looking at the silver, I'm afraid that we could retest lower supports here. So $22, 22.50, that's the ideal zone for this wave 4, because here you have this 38.2%, and also wave 2 distance compared to wave 4 is still, based on timing, it's still not there. Maybe next week could be very interesting zone for a potential bounce. Okay, so definitely I'm bullish silver, but I'm expecting and I'm aware of potential lower retest of the support here. Also, also looking at the S&P 500, this one is not really clear, to be honest. It's a quite ugly price action, some overlaps here in this recovery from October lows, which after all could be a leading diagonal, then a very sharp drop, and now also some very nasty recovery. Not really looking like a very strong impulse. So still we are at a very strong resistance at 78.6%. So as long as we are ticking here at these levels, very important big figures ahead of the Fed, I think it's a very risky to bet on any direction here. We just either should see a close above 4,200 to turn really bullish here on the S&P 500, or maybe the daily close here below 4,000, which is also a very important psychological figure, is needed for the bearish price action. So for now, around these levels, it's really neutral, but I am aware of potential wave B rally here, because clearly we had in the previous drop very strong leg to the downside, and now this appears to be much slower. So ideally that's a wave B, but as I said, 4,000 has to be broken, confirmed by the daily close price below that level to make sure that weakness is going to take price even lower, and obviously above, as I said, 4,200 to make this a bullish close, to make this index bullish. Okay. Also, if the Fed would be hawkish, keep in mind that stocks would come to the downside. If the Fed will confirm that they will slow down the hiking pace, that the inflation is coming to the downside as expected, then obviously stocks could potentially rally. Okay. Now let's take a look also on euro dollar. Now euro dollar still looking to be trading in a fifth wave. I thought that we have an ending diagonal here, a major top for a wave 5. Obviously this is not the case yet, so just be aware of high resistance 1010 maybe. That's the key resistance level. Also you have 50 pips lower, you have this wave 5 to wave 1 target. So whole zone still very important in my opinion. Even if we see a break to a new high, I would not change this primary wave count. I still think that potentially we are moving into this resistance. Even if the ECB will be very hawkish tomorrow, of course euro could jump in price, but keep in mind that there is a lot of speculations already priced in the market, so the reactions can be later on, can be a little bit different. Maybe we get a spike to the upside and then market reverses lower. Also, let's take a look here on dollar yen. Now, dollar yen were very slow today, not today, for the last 2 weeks or so, but still it appears it's in a fifth wave, could potentially even retest the levels here around 126.50. That was a swing low back from mid of 2022. So also looking like a wedge formation here. If we get a new low, I would not be turning bearish. In fact, I would pay very close attention to potential supports here. If we would rally from a new low in impulsive fashion, I could even look for potential longs here, if the dollar of course would would show signs of reversals versus other currencies as well. Now let's take a look also on dollar NOK. Now, if suddenly dollar would really crash further after the Fed today, and maybe even we see more dollar weakness after ECB tomorrow, then I think that dollar NOK could be an interesting one for more potential weakness. Now here I'm looking for a potential head and shoulders top formation. We tested this neckline few times over the last month or two, so I think that more tests we see, stronger can be a breakout when the breakout occurs. Okay, so a daily close below 9.8 around there could potentially lead to a breakout, and we could be very quickly later on around 9.5 9.37 levels, which are the swing lows here back from 2022. Also, this head and shoulders pattern is the big one. We have the smaller one also here on the 4-hour chart. We recently recovered very nicely. We stopped at a 61.8% potential resistance here, the ideal one. So again, so far from a poor price action perspective, this looks like the pair wants to continue lower, but still 9.8 is a very big level that has to be broken to make sure that we are here on the way down. Also, it's a very important, very big day. Actually, Thursday will be the same. You have then Friday's jobs data, so markets could be all over the place and not easy to define the next direction until you really see some decisive breakouts. That's why I'm always trying to remind you that daily close prices are the ones that we should pay the most attention. Also, looking at the euro pound, I shorted euro pound here last week after this ABC rally. Unfortunately, this unfolded as a complex correction, but still it looks like this pair could have room for more weakness, but the recent reversal to the upside on the euro dollar is now driving euro pound back to back to higher prices as well. So I will be interesting to see if maybe this level at 88.50 could stay in play. Then this bearish look is still valid. If we break this one, then I think that this whole consolidation here will just keep going and could potentially become even much more complex or something else. But again, Bank of England is tomorrow, so clearly this pair will be very volatile. So we'll see how this will play out. I definitely have stops here above that levels and don't want to chase the markets with any new orders ahead of the central bank decisions. Okay, traders, thank you very much for your attention. I hope that you enjoyed this video, and I will again give you an update after those announcements. Bye.